Attention A1 Trading Show fans. If you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now, back to the A1 Trading Show.
Hello. Happy Wednesday. How are you all doing? Hope you're all having a great mid of the week. It's Wednesday hump day. So what I want to do to start off the show is show you that I'm a man of my word. Anyone that has watched my segments before, you will have heard me say that I was allocating capital over to MetaTrader, and the plan was to make a MyFX book, which I have done. So you can see it was started on September the 5th. This is not photoshopped. It's not inspect element. It's all clickable, scrollable. You can go and see it for yourself. It's a public, all public. So this month we are up 4.34%. So, just wanted to make that very clear, that when I tell you I'll do something, I'll do it. And when I tell you that I'm looking at a chart or I trade a specific way, it's because I do it. I also want to do a little bit of a flex here because I'm really happy with the execution that I had on silver the other day. So half of it was yesterday and the other was sort of a intraday small swing. So we had an entry down here at 31.16, closed out at 31.48. But during this period, we had drawdown. And I've said before, I don't see any issue scaling into losing trades as long as you have your strategy and you have risk management set properly. I really don't believe in scaling into trades just because you're losing and want to fix it. So obviously there are reasons I scaled in, which, I can cover if you want to, but if you're not bothered about that, that's fine. So closed out here. And then we had, I was a bit salty. I missed this move, but again, I saw a statistical play come in. So right as market closed, so I think it was about 9:30 p.m. for me, UK time, took a short position, closed that one for profit right here. And now I'm back in for a long position on a more of a swing trade basis. So there you go. Just wanted to show off that sort of milking on silver that I did, because it was very good. So open positions, obviously we've got silver, we've got pound Swiss to the long side. This is mainly trading rate divergence. Obviously we've got the Bank of England holding rates at 5%, and they're not really, or it doesn't seem like they're in much of a rush to start cutting. So we've got that, and then we've got the S&B as well, that essentially is looking to cut, or it sounds like they're going to cut. And we also have a declining trade balance for the Swiss as well. So overall, that trade looks great. We are also in pound yen to the long side. Very similar thing here. We've got the Bank of England holding rates. We have also got the Bank of Japan sounding quite dovish. Essentially, to me, anyway, it sounds like they're not going to be cutting rates for the foreseeable future, or the near term anyway. S&P 500, I'm in long here as well. So looking essentially for the 6,000 level. Now, don't get me wrong, I'm not looking for a 14% trade here. I am more looking at 6,000 over the next couple of months. So I'll see how this one goes. I might close out if we do manage to break out and create new all-time highs. And yeah, we'll sort of manage this one as it goes. But so far, so good. We're still stuck on this resistance level, which of course is fine. We've got a couple of minutes until NYSE. I did take a long position on Bitcoin as well. However, this one isn't working out too great. I'm not a crypto trader, really. It's more, this was just technical play. So this one isn't doing too hot, which is fine. It was more of one of those trades where the technicals on the lower time frame were very compelling. And I was happy to take that risk. And I completely understood I didn't actually have any fundamental backing. Pound dollar should be quite an obvious one. Obviously, the Fed is quite dovish. It seems like they're in a cutting cycle now after they've had a 50 basis point cut. And it's so far seems like they will cut again in November. And again, going back to the Bank of England, they've held rates, and it doesn't sound like they'll be cutting. And if they do, it'll probably be 25 basis points, not 50. So we have a bit of a rate divergence there. Also, finally, in oil longs, so here you can see very clear trend to the upside. We've got oil inventories coming out pretty soon. So here we can see, oh, actually, that's the wrong page. Here we can see a projected decrease. So essentially, if inventories are down or we get lower than expected inventories, there's essentially an increase in demand. If this comes out higher, then we get a decrease in demand. So pair that with technicals, and we've got quite a nice potential trade here that's so far doing so well. James, what happened to your Microsoft idea? To be honest, I couldn't materialize it. I actually think it worked out quite well. Should we take a look? Oh, this is the H1. It was the H4. Yeah, so it was something, I can't remember exactly where it was. It was somewhere around here. I was looking to go long, but I didn't take it because I just didn't, I'm not a stock trader. Seasonally and technically it looked great, but for me, I normally need a lot more than that. I like to have a bit more of a substantial reason for a trade. So as we go into the day, we have got the DAX 40 down 0.4%. We've got the Nikkei up 0.7. We've got NASDAQ down 0.18. The FTSE or UK 100, we've got up 0.15. The Dow Jones is flat and the S&P is down 0.1%. Oh, this is the daily. Yeah. Change percent. I think I might have got those percentages a bit wrong. Is Nick still gone? Yes, it looks like it. I think Athens was the last thing I saw on his social media. So in the Greece. Let's see. What pair was that? I think you're talking about silver, the one I was looking at first time. US dollar Swiss. Let's take a look. So, I mean, we are still seeing this consolidation. There's no movements either way, really. We do have the Swiss that is viewed as overvalued. So not looking really to be going into this one. Although the S&B has said that they are okay with it, or it's projected they're okay with the overvalued Swiss for now. That won't last forever. And of course, the Fed is looking to cut rates. So if we're looking more to build a forecast for dollar Swiss, I don't have one, because if the Swiss starts to lose value, and obviously I expect the dollar to continue to lose value, then we're trading two weak currencies against each other. So really, I think short side has more potential because, as I said, the Swiss is overvalued, but it's looking sustainable for now. So yeah, I think a short-term sell would be more ideal than going long. But yeah, it's not something I will look to trade. Can we buy USD JPY now? Can we buy USD JPY now? I was actually selling dollar yen this morning and got stopped out. It's difficult. It's a difficult one to say. I wouldn't really be looking to do anything here. I think pound yen and essentially all the other yen pairs, apart from dollar yen, have more potential. So the problem is the dollar is quite weak and the yen is quite weak. So when we've got assets such as euro yen, pound yen, I just don't see a reason to go and trade dollar yen. I think, actually, let me check the edge finder. I think there's some yen pairs that are bullish on here. Let's get rid of the neutral. So we've got Swiss yen, CAD yen, New Zealand yen. So you've got three yen pairs here that are signaling bullish. So yeah, in my opinion, going in for a dollar yen long when you've got better options, it doesn't make much sense. Watch list. Let's take a look at what we've got. Of course, still watching gold. However, what can we really do here? There's no choice on gold really other than to wait. I have been looking at day trading gold, but even so, it's just so extended. I really, really want to see a pullback on gold. But of course, it doesn't matter what I want. I need to wait and see what happens. The Russell slowly declining to the downside. However, nothing too dramatic. I think I'm going to scrap my idea here. I might come back to the drawing board on Russell, but yeah, for now, scrapping it. Australian dollar, US dollar. This one, again, in my opinion, seems quite good to the long side, but it's just a case of waiting for the pullback. Reason is we've got rising commodity prices. We've got improving Chinese data, and obviously the Australian dollar is very heavily driven by Chinese data and commodity prices. So if you, for example, if you look at copper, which I'll get onto in a minute, that's on the watch list. Copper's rising quite nicely. And then we take a look at the US dollar, again, looking for a weak US dollar as we see potentially another rate cut in November. Euro dollar, I'm a little bit on the fence here. I am more on the long side, but even so, I'm not willing to take a trade on euro dollar. It's more just on the watch list to keep an eye on it rather than to place a trade. So copper is juicy. Essentially, I don't really see anything in the way to stop copper. So essentially what's happened is there's been more stimulus in China, which then increases the demand for industrial commodities like copper. So what we're seeing is obviously a rising price, but it's a similar situation to gold in terms of if you're not already in, you can't really get into it because yes, we had a pullback this morning. However, it's not, in my opinion, for a swing trade, it's not a deep enough pullback. I really need to see a pullback down to this daily, sorry, H4 and daily level of structure. And this would also meet the 50% level quite nicely. So essentially just waiting for a pullback here. Australian New Zealand dollar bearish. I would suggest the Australian New Zealand is actually more bullish than bearish, but I haven't looked at the chart for a while. So let's see. Yeah, the reason I'd say bullish is for the same facts I've already said. Strengthening Chinese data, rising commodity prices benefits the Australian dollar quite well. New Zealand dollar, you know, it's okay, but in my opinion, there's nothing really there to drive a New Zealand dollar significantly anyway. Solmo Motion TV, please show me love. Okay, I'm sending my love to you. There you go. Harry wants to look at US dollar CAD. Let's have a look. So it looks like I was already going in for a short here. It's actually a bit disappointing. I was short on the US dollar CAD not too long ago. It was right before we had, in fact, it was the day that we had FOMC. And was it here? Yeah, I think it was around here. So I was short off this 50% level and this level of resistance. However, it was at the time, it was only technicals. And I didn't want to hold it through FOMC because at the time I was more expecting a 25 basis point cut. And from that, I would have expected some slight bullish movements. However, obviously the opposite happened. So I didn't really capitalize on this. But the idea hasn't changed. I would be quite happy to go short on the dollar CAD. This actually looks quite nice, really. So we've got this fib level here. So we've got the 0.618 and the 0.5, and some slight structure through here. It's nothing too major, but it could be used as a sort of new resistance. Stops just above this traffic that we've got here and the wick. This would also allow room for the 200 moving average. Take profit down at the fib extension. And actually, let's see. We may be able to get something here. Actually, maybe just put it at this larger or longer term trend line that we've got going on. Yeah, I think dollar CAD to the short side actually looks quite good. So we'll see how that goes. Euro CAD longs. Let's see. What I'm going to do actually is just have a look at some of the research. I'm not too updated on what's going on with the Canadian dollar at the moment. Just give me a second to find it. Here we go. So for the CAD, the CAD has gained strength against the US dollar post FOMC as the USD shows signs of weakness. CAD tends to benefit from strong oil prices, which were also supported by expectations of higher demand with lower US rates. USD CAD dropped, strengthened, backed by strong oil prices. So at the moment, the only thing notable about the Canadian dollar is oil. And if oil is gaining strength, like I'm expecting it to, then we can expect some CAD strength, which obviously wouldn't really work for Euro CAD long. So yeah, this one would be, in my opinion, trading two relatively strong currencies against each other. The Eurozone data is improving. And obviously, like I said, we've got slightly rising oil prices, I expect. So yeah, we'll see. But EuroCAD isn't something I would really look at right now. Cool. Okay. So let's see. Oil continues to move higher. Pound dollar continues to move higher. Bitcoin slightly moving higher. S&P, is that a new all-time high? Let's see. It is. Nice. So yeah, S&P just made new all-time highs. Pound yen not doing too much. Pound Swiss continues to move higher. Silver also moving up nicely. So yeah, quite an easy month, to be quite honest. Up 4%, currently in profits as well. So you know, if all these trades work out quite well, or work out as I imagine, there's no reason I couldn't end this month at 5 to 6%. Now, I should probably clarify that's not normal, and that's not something you should expect every month. This has been a very high performance month for me. And yeah, that's about it really. I don't want to sit here and show you guys one great month, because obviously it's still a new track record, and then give you guys some false sense of what you should be doing. If you can achieve 1 to 2% a month consistently, then you're performing at a very, very high standard. To put that into perspective for you, let me have a look and see if I can find, is it this? No, it's not. Just give me a second, guys. I got something I want to show you here, but I'm not sure where it is. Here we go. So this is a bank report from Credit Agricole. So for all those people that sit and tell you they can do 5-10% a month consistently, they're buying Rolexes and they're doing crazy numbers. It's a bank report. It's from an institution, and it's written by real professionals. They can see their researchers won awards. What do you think these guys get? I'm going to show you the answer pretty soon, but here, this is their return, total return year to date. So from, I think year to date is September to September. I think I'm maybe mixing up what year to date actually means. But either way, within the past 12 months, they've made 2%. So I've doubled their return in 1 month. Does that mean I'm better than them? Absolutely not. But this is to show you these are the, essentially the best of the best. These are the people you're trading against. So if you can do 1 to 2% a month, you're outperforming professionals that have studied economics, finance, accounting, with teams of analysts around them. You are doing better. So there you go. That's something you can set your standards around. Bearing in mind, that's not even reaching the benchmark. The benchmark for traders is the S&P. If you can outperform the S&P year on year, that's also another sign that you are in the top percentile of traders. But yeah, that's a different topic. Anyway, I got a little bit distracted there. Let me just double check my time here. I don't want to run into someone else's time slot. Okay, cool. We've still got a bit of time here. It's Chris on after me. So what about the CHF JPY shorts? Then is it at 61? Let's have a look. Swiss yen. So what were you asking here? It's at 61 pullback and daily H4 showing rejection plus Swiss cutting rates maybe. Let's see where your fib is here. Yeah, I mean, technically it does look quite good. The problem I have is that, as I was saying, the yen is quite weak. The Bank of Japan sounds quite dovish, in my opinion. And as you said, S&B is looking to, well, it looks like they'll be cutting rates. So again, it's two weak currencies against each other, not something I'm overly favorable of, or overly in favor of, I should say. US 30, please, James. We can definitely have a look at US 30. Yeah, so it's the same with Nasdaq and the S&P. You can't really do much here, unless the only way I see trades being valid here is if you were scalping or day trading. If you're looking for a swing trade, you would need to wait for a pullback. And where that would be is very difficult to gauge, really. I suppose you've got previous all-time highs. So you could see sort of the break and then a retest here and a continuation to the upside. And I think that would be sort of the main approach I'd be looking for here. If we don't get that, then it's a case of just waiting and sitting on your hands. 5-min demand functioning. I don't know. I don't trade the 5 minutes. It's way too low. Lowest I go is 15 minutes. And that's normally where I execute on. Looks like we're having a little bit of a pullback at the moment, which is fine. All good. Wheat. Oh, interesting. This is a wheat position I've had on for, actually, let's see, 10 days. In fact, over 10 days, 12 days. And I've kind of forgotten about it. Yeah, interesting. I should probably close this, actually. I've completely forgot that I had wheat open, which is really bad. But yeah, I need to probably catch up on that one after the stream. Swiss yen, euro yen. We've already done Swiss yen, so we can have a look at euro yen. So euro yen. Oh no, it's not. Euro yen was on here, I think, last time I checked. But yeah, we can look at euro yen. So I think euro yen to the upside actually could be a good idea. So if I'm expecting a stronger euro and a weaker yen, let's just see. I suppose the difficulty here is really the overall trend. You would need to essentially be trading against the trend here. You can see we are creating lower highs. The moving averages are bearish. And obviously we have had a large price decrease. So what you would need to do, or the way I would approach this, is wait for this break and retest and look for this moving average trend change here. And once we get that trend change and a break and retest, that to me would signal quite a healthy or a potentially healthy move to the upside. But yeah, right now I think it's a little bit premature. I only trade 1 and 4 hour timeframes. Fair enough. Yeah, I do analysis on the H4 and the H1 and then execute on the 15 minutes for day trades. And then for swing trades, I'll look at the weekly, the daily, and the H4 and the H1, which is why I've got the 4 charts here. Let's see. Is there anything in terms of news that's coming up? Let's see. So, economic calendar this week. So we've got New home sales coming out in 14 minutes. Crude oil inventories in about 45 minutes. Now we've got the S&B rate decision tomorrow, which will be interesting. Actually, let me change this to my time. So this is coming out pretty early, actually, for me. So 8:30 in the morning. Durable goods, we've got GDP, jobless claims will be very important. We've got the Powell speech, PCE on Friday. So yeah, I guess tomorrow is kind of like the danger zone, or busy day in terms of news. But other than that, relatively quiet. XAU USD. We can take a look at gold. It's very difficult to really talk about gold at the minute because there's nothing to do. It's just on a rocket to the moon. I assume Nick's still in this trade. So if he is, I'm very jealous because him and I had the same entry around here, roughly. Unfortunately, I was stopped out during this sort of consolidation at break even. So I missed all of this, which is heartbreaking, but there you go. It is what it is. But yeah, I think with gold, there's nothing here. You essentially just need to wait and look for a dip. So whether it's to here or to here or to here, it doesn't really matter. Essentially, until the economics or the drivers behind gold change, it's just free money, really, essentially, if you can get in. Anton, I'm not really sure what you're talking about. 1 min, all assets to go. Time frame crucial. The 1 minute time frame to me is just it's not worth even looking at. A lot of it is just noise. It's corporate buying and selling, not speculative trading. There's not really much you can do on the 1 minute time frame to get an edge. Just trying to think. Oh, the currencies. Let's have a look. Dollar is. Let's have a look at the candles. Is the dollar about to break our level? Looks like it is. Finally. So I've been talking about this level for a long time, which is sort of 100 to sort of mid 100s. Essentially just waiting for this break, and then when we get a clean break and maybe a retest if we're lucky, then on this retest I might start going in a little bit more heavy on the dollar shorts, but until we see the clean break of this level, there's not too much I'm interested in. I'd also like to see this low here get taken out, because what I don't want to do is see this happen, get in heavy dollar shorts, and then we just reject this level and head back up. I mean, this is the daily time frame. It accounts more for the economics and the price action, but it's still something to pay attention to. That's why break even sucks. Break even sucks until it doesn't suck. So what I mean by that is, it can save your ass sometimes. It can really save you. But then other times, you get situations like this. And to be fair, this was my fault because I was too aggressive with my trailing stop. Normally, I'd give it some more time to breathe. But yeah, I was just super aggressive. So it was my fault. Pound Australian looks bullish on the daily. What do you think? Pound Australian. Yeah, I see what you're looking at. The problem is, it's kind of just a range, really. I mean, you've got range, range, range. So yeah, I mean, not in terms of trends, I don't really see one. I mean, according to the 200 moving average, which is the gray line here, it is bullish, but there's no factors or nothing really here for me to look to get in on. Even this sort of resistance that we've got, we're just sort of hanging around. We're not bouncing off, bouncing down. We're not doing anything here. So to me, again, just flat, nothing really to look at. Wide stops are better massive. are not oversized trades so you can sleep at night. If your position, it doesn't matter on the size of the stop. If you're not sleeping at night because of a position, decrease the risk. So whether that be increasing the stop or reducing the lot size or the contract, then fine. The only way, is this what you're doing on a Wednesday afternoon or a Wednesday morning? You're coming to a trading live stream to preach? Fair enough. I missed USD JPY. So did I. I was on the wrong side of UJ this morning, but it was fine because I was hedging my GP JPY long position, which actually we'll see what's going on here. Markets have been a little tricky. Yesterday we had quite an aggressive turn to the downside, actually. Well, when I say it was aggressive, I mean like relative on the time frame, obviously. But yeah, it was a bit unfortunate. Oil's doing well. Let's see. I'd be quite happy to lock in some profits on this account, actually, which I think is what I'm going to do. So what you can do, actually, you can sit with me and you can do it here. So we're going to close out these positions. There we go. So the portfolio is completely flat. And then what I'm going to do is update the MyFX book. So it's currently 4.34. I had some losses this morning that haven't been updated yet. So we can do this together and see what I won't be trading now until next month. I think I might call it time here. Always takes a minute. And then we can refresh. 4.15. So we've actually decreased a little bit, but that's fine. The portfolio is flat. We're up almost $100 in profit, obviously on a small account. So there you go. Trade done, proof shown. What would you personally consider a valid break and retest in order to enter a trade? Sorry, I'm a beginner. I don't know much. That's completely fine. We all need to ask questions to learn. So let me find a good example. Let's see if silver's got a good example here. Here, this is a good example. So what we've got is structure. Now, this is a bit of discretion. So I can't tell you how to identify structure. It's sort of something that pops out. And this will you'll get used to this the more you start to look for it and draw it up. But what we've got is the high here, or consolidation. You can call this whatever you want. To me, this is sort of previous high. And then what we've done is created this resistance off this level, this structure. We've broken above. So obviously we've broken past and above the previous resistance. And then what we've done from here is come back down and retested this as support. So what we've done is gone from resistance and turned it into a new support. And that's essentially it. Break and retests are essentially trading 101. Really, it's I want to say it's the easiest way to trade. And now that's probably quite misleading, but it's a very simple way to get an entry. Obviously, you need to pair it with other things because things can happen like false breakouts and new spikes. So you need to understand why the market's moving, but it's still a great entry criteria. Who trade US oil? I trade US oil. US oil is a great asset to trade. The price action on oil is generally very, very clean. So I think I deleted my drawings off there, which is a bit annoying. Can I get them back? Yeah. So, you know, all you really had to do here is look for a trend line, and I secured roughly 1%. It's so simple. Oil's a great asset to trade. So what was someone asking for? New Zealand dollar. Here. It seems overall the New Zealand dollar is outperforming the US dollar just by looking at the trend here. We're very clearly moving to the upside. So just going off that, I'd really be looking for Oh, actually, this doesn't look bad. Now, it's not a trade I would take. And to be honest, I can't really tell you why I wouldn't take it. It just doesn't appeal to me, but technically it looks quite good. So what we've got is the 50 moving average that's come up to almost meet price. We've got a level of what was resistance and now potentially support, so creating a break and retest. We've got the 50% level here. We've got the RSI that's oversold. So yeah, looks okay. What I would want to see, though, is a very clean bullish candle to the upside, just to signal that the momentum is bullish. At the moment, we're slowing down. You can see the wick to the upside sort of moving sideways the past 4 candles, 3 candles. So yeah, not right now, there's not enough there for me to start buying. But yeah, maybe if we can get a nice bullish candle off here. Brent and WTI by time zone. Anton, I'm really sorry. I've got no idea what you're talking about today. I don't know if I'm just being a bit stupid. But yeah, not really sure what you're referring to by the time zone. So yeah, out of all positions here. So I'm just going to clear the watch list and we can start again later. I shall leave that one. Yeah, oh no, wait, need to keep that one as well for now. We can get rid of that. Yeah, we can get rid of this as well. There we go. So there we go. Cool. Where would you draw fib on gold? Your guess is as good as mine. Okay, you're asking a tough question there. Let me see. I mean, I guess it would be here. So it would be from the low to the high. And again, this is where a little bit of discretion comes in, because you could also argue there's a low here. Now, depending on which time frame you're trading and how long you want to hold the trade, you could look at this the most recent sort of wick down here. However, I'm more interested in the one that we've got drawn up here, and the reason is because the 0.618 level lines up with the previous structure. So I would look to have a stop loss below these lows, and a take profit at 3,000. But yeah, that's the only way I can really look at gold at the moment. It's like asking me to analyze a straight line. What SMA am I using? I use the 200 EMA and I use a 50 EMA. James, what do you think about US 2000 going long off the 50 EMA? Let's see. James, EUR GBP, we can get onto that. I've still got just over 15 minutes, so don't worry, I will get to your chart requests. So you want to go long off the 50 EMA. Let's have a look. Yeah, I see why you would want to, and it's definitely not a bad idea, in my opinion. It's just this pullback just looks very, very tempting. So let me draw this up. So the 200 moving average here, I'm just more leaning towards something like this, where we see, here we came to 200, 200, maybe we come again. And that is just a maybe. I'm not saying that will happen, but that's really what I'd like to see. I'm not sure I'd be too confident buying off of this. I feel like we'd be buying very expensive or buying very high when we could maybe see a lower price coming. Euro pound. So let's get onto your request. So euro pound very clearly is to the downside. So although we've got Eurozone data looking a little bit better. The pound is very dominant at the moment. So we can see that on the index here. So, I mean, actually, the euro looks quite strong as well. But if we look at the way the pound is forming at the moment, we've got very clear low, higher high, higher low, higher high, higher low, higher high, higher low. You couldn't really ask for a better chart. This is essentially what the gurus use as an example for a trend. So yeah, the pound looks great. Now this pullback also looks great on the H4. The problem, to be fair, I actually probably would have taken this if I was paying attention. The thing I see here is just the 200 moving average. It's pretty far away for me. So if I was going to short this, I'd like to see a higher pullback, potentially into this golden zone, let the 200 come down, and then we head to the downside. Something more like this. I just don't think this pullback is far enough. So if we also look within this fib level, we've got what looks like it could be a break and a retest. So that's something to keep in mind if you are looking at this. Actually, I'm going to add this onto my watch list as well. I'll keep that there. Pound Australian. So, didn't I already look at Pound Australian? I think I did. Essentially, did I? I'm not sure if I did or not. I think I did because I was pointing out the consolidation. Yeah, so what I said was there's a range, and there's a range. So there's not too much here. We are slowly moving to the upside. But if we look at the technical level here, this structure, we're not really doing anything from here. You know, we broke above, you'd expect, or typically expect the retest to the upside, but we didn't. We broke below, came back above, went back down. You know, there's nothing here technically. The pound is strong, but the Australian dollar is also strong, which is likely why we're just seeing the range, because as I said, the Australian dollar is driven by the improving Chinese data and the increasing commodity prices. The pound is driven quite heavily at the moment by the central bank holding rates. So yeah, overall, two strong currencies against each other. Bum, 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 bum. Yeah, so you can see commodities doing quite hot. Natural gas is up. Gold is up. We've got copper up, silver up. So yeah, the commodities aren't messing around at the moment. Definitely look to capitalize on the commodities move that we're seeing. USD JPY H4 fib looks interesting. H4. Yeah, technically it does look really nice. We've got, again, nice level of structure. We've got the 200 moving average. We've got the lower highs. So yeah, everything technically is falling in place. I'm just really not looking to buy this market or sell this market right now. I think, to be honest, I wouldn't be opposed to buying eventually, but yeah, not right now. Euro USD. I've got 10 minutes left, so if you've got any final questions, let me know so I have enough time to see them and give you a good reply. Euro dollar is hot. You know, as I said earlier, I'm on the fence. You know, it's not something I'm going to go and buy, just because technically I'm not happy. However, economically, it's quite good. So what we've got technically is a strong level of weekly resistance through here. So really, I want to see the break and the retest. But the problem is looking for breaks and retests and patterns and things on the weekly time frame is it's going to take weeks. So if we wanted to wait for a break and a retest here, we could be waiting a month, maybe even more potentially, depending on how volatile the market is. But yeah, just looking at the weekly level, it's a bit scary to go and buy into that. So really, either the break and the retest there, or we'd have to wait for a valid pullback. Ignore that fib, so meant to be there. Yeah, I'm just trying to see. Yeah, I just don't think now is the good time. I just think we'd need to wait, really. It's a bit annoying. A lot of the markets are at extremes. So again, the commodities quite high, pound dollar very high, euro dollar very high. So what can you really do? SO, the Edge Finder. I'm not sure what SO stands for. Sorry, I'm a bit behind on all the cool lingo people use. Gold buy or sell. You tell me if gold's buy or sell. Give me a signal. Can a high volatile graph have several supports and resistances? If so, how do you know which one is the strong zone? Okay, that's a good question. Yes, a chart can have multiple supports and resistances. You can determine the best ones by using higher time frames. So for example, if I'm looking on the H1 and I say, let's say this here, this looks, on the surface, it looks like a really strong, nice level to buy from, which to be fair, it was. But if we go onto the weekly or the monthly, you can't even see it. Whereas with this level, we can. The other way to go is to think of it as if it's a survey. So for example, how many people are looking at this level of support at the same time as you are? Maybe a few, maybe a couple here and there. Whereas how many people do you think are looking at this weekly level? Probably a lot more. So if you took a survey of 100 people, would you trust that more than a survey of 10,000 people? Probably not. Hence the higher time frame levels of support and resistance. The other way, which is very useful to know, and this is the last thing I'll say, and I'll get back onto some charts, is when you're looking at levels, see if it's a round number or a psychological level, because what often happens is you are more likely to see a reaction at 1.15 rather than 1.32496, for example. And again, that's why it's called a psychological level. So yeah, there you go. So a quick rundown for you. Can you share fib settings? I can. That's not a fib. The fib is here. So there you go. Can you see US30? Yes, I'll go into US30 in a moment. Got 5 minutes, so we'll end off in US30. We've already covered it, but yeah, we'll go over it again. So yeah, for the fib, we have got the 1, we've got the 0.68, we've got 0, we've got 0.5. So the 0.618 and the 0.5 is the middle ground here. That's where we want to see price pull into. The negative 618 here is our take profit. So for example, if you had a position, let's say from 0.5, stop loss here, take profit here, it gives you, obviously, essentially, it depends on exactly where your levels are, but it will generally give you a 1 to 2. So it's a good guideline, even if you don't use it exactly, it's a good guideline for a take profit. Okay, you're, what was I looking at? US30. So yeah, well, as I was saying earlier, it's quite difficult to trade a lot of the markets right now. So the indices, the commodities, the US pairs, we're very extended. So like the S&P, NASDAQ, US30, all-time highs. We've got gold, all-time highs. We've got copper, natural gas rallying to the upside. You can't get in. Well, I'm sure you can, but it's very difficult to get in with a solid entry. So there is nothing to do. It's a case of just wait for your entry criteria to get met, whether it's a scalp or a day trade or a swing trade. But yeah, all I see here on the Dow Jones is just this level of previous resistance. Maybe look for this retest and a continuation to the upside. But yeah, looking at this, yes, it's moving to the upside, but how are you going to enter this? In my opinion, you can't really. So yeah, same with DAX. Need to see some sort of pullback here. I'm sorry, I can't give you some cool complex breakdown because there is just nothing going on. We're stuck at resistance. Need to see a pullback. Let me see actually if I can have anything here. Conclusion: the S&P has demonstrated strong year-to-date performance, but faces valuation concerns and actually, sorry, let me just show you something that you'll probably find a bit more interesting. I found yesterday the targets on the S&P by institutions. Here we go. So I'm not sure how well you guys can see it, but I'll read them off for you. So down here at 4,200, we've got JP Morgan. Then we've got, in fact, I can't even see it. We've got Bank of America and HSBC at 5,400. We've got UBS, Barclays, Goldman, and Citi at 5,700, and Deutsche Bank at 5,750. There are obviously others on there, but I've just named off the more known ones. But I'm interested. Why is JP Morgan targeted 4,200? And I was speaking to one of my friends yesterday, and he said, if you're managing, 10 trillion a day, why would you not try and mislead people? I was like, you know what? That's pretty fair thing to say, really. Just subscribed after watching one of your gold trading videos, Trader Nick. Now I'm here. I'm excited to learn more. Ali, I'm not Nick, but I'm sure he appreciates that. NASDAQ on 30 minutes, buy deep. Okay, I've got 3 minutes left. We can have a look at this buy deep idea. NASDAQ on 30 minutes, buy deep. Where are you buying deep here? I'm not sure what you mean. But yeah, I mean, it's definitely not a dip or anything to buy, but fair enough. Anyway, guys, 2 minutes. Just trying to think how we can fill up this 2 minutes with something here. Let me see. I don't think there is. This is a bit of an awkward silence, isn't it? It's like when you're on a date and you run out of things to say. So what we've got, pound dollar is rejecting, kind of not doing anything interesting. Pound yen, I'm quite optimistic on pound yen. So for anyone watching and paying attention, I am still very happy with this position. So take of that what you will. Pound Swiss, again, pound Swiss is a very strong position for a longer term. Oh, sorry, for the longer term. What else are we in? I think that's it. So that's about it. Gold will revisit 2670 soon. I'm sure it will. I think gold will reach 3,000 pretty soon. When I say soon, I don't mean like tomorrow. I mean in the near future. So whether it be the next 6 months, maybe, we'll see. Trust me, if that happens, I'll be back to the stream to clip me saying that and claim that I'm the best, and I'll be selling a $10,000 course. How do you determine take profit so you don't end up losing? That's a very broad question, which I don't have time in this next 4 seconds to answer, so I'm sorry. But there's lots of videos on YouTube for that sort of stuff. So, guys, you have, let me just double check. I got the person wrong last time. You've got Chris on. So I appreciate you all being here. James, I applaud your patience. No, it's a pleasure being here. You don't need to applaud me for anything. Guys, have a great day. I'll see you very soon. And Chris is coming up. Don't leave.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat. You can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. What's happening, everybody? Happy Wednesday. Let me grab the screen here and let's get going. Just had a couple trades closing up on SPX. Winner, chicken dinner. Little SPX trade for a quiet morning. Grabbed a couple bucks out of this chop, which was nice. I put on a little bonus trade. If anybody's interested, I'll throw this in the alert section. This is a little short-term trade. Let me go into my Discord for A1 trading under stocks and options. This is going to be the SPY 927 expiration, 574 long call. Let me see what it's trading for right now. I got filled on it for $1.09, and right now the SPY out to Friday is trading for $1.11. So long call 111 to 115 debit. Profit target is if SPY hits 574 to 575. Check for credit, or based on the current delta, looking for a 215 to 225 credit to protect. Okay, and then I'll take a screenshot here. This is what I'm watching for. So put in my little arrow. SPY 574 long call for $1.10 debit. Okay, so I'm going to throw that trade in, and all I'm looking for is if price will just make its way up anytime between today and Friday. That's all we're looking for. So if price just kind of melts up here towards 574, 575, I'll check for my 110 debit to be trading for maybe $2 credit, $2 and some change credit, and I'm going to take some profit on that trade. So that's what I'm looking for. That's the trade, and that's my screenshot. Throw that in there, and that's going to be posted in the A1 Discord under my trade signals. There it is. All right, so keep an eye on it. So we got that going for us. I took a look this morning to see, how's silver doing, how's gold doing, how's China stocks doing. China stocks were looking to open up a little bit lower, so that was a big crazy day yesterday. I had a ton of P&L, hit some fresh watermark highs for everyone's account. That was great. And I want to take a look at all that stuff today. So we're just doing this little melt up. I also have with the 562 center on my SPY. I'm looking to see if we can actually crack this Thursday high. Is there a melt up here towards 575? Is there a melt up towards, maybe, I don't know, who knows? The expected move, let me go to like this week, for example. If we go SPY for the rest of the week, I mean, I'm seeing a 575 is within the cards for maybe another $3.74 some way directionally. So if we get to 575, that should be enough to turn a 960 debit into maybe like an $11 or $12 credit, and that's fine. I'm looking for like a 15 to 25% take profit. So I have vol plays on SPY and Qs, which also is looking to be breaking out above Thursday's high. Oh, look at you, NASDAQ. So Qs are going up. Let me see where my Qs are at. So this is another couple of bucks from yesterday. So 485 and I got to check this one. So let's go QQQ. check on some positions here. And if we drift a little bit higher today, I do have some trades on ES that I'll take a look at as well. Qs, somewhere in this mess of signals. Oxy's dropping a little bit, but I do have that protective put just in case. QQQ, individual accounts. Here we go. October 4th. 1, 2, 3, 4. This trade cost me $11.50, and it is currently up $13.05. Ooh, okay. Can we melt up a little bit more? Should I take the profit? $1.50 a contract's not bad. I am playing this out to I'm looking at the cues. It's like we're sitting here with today's price action above Thursday's high. This melt up, I mean, this would be my supply zone up here. This would also be a nice gap to fill. But if I've got the profit and the time, let me see if I can get out of here for 13 bucks. I'm going to try to go after $13 and just take the profit. So pending at $13. I'm going to go ahead and put issue order closes here. So go into my October 4th and close, looking for a $13 credit. Pending. All right, we'll try to get these closed up at 13 bucks. That'd be $1.50 a contract. 3, 4, close. And if we gap higher, or we just find it smoothly today, that's fine. So I'm going to try to get these closed for 13 bucks. So 1, 2, 3, 4, close. $13. One, 2, 3, 4. Going into your broker platform, it does feel like you have to have a little bit of obsessive compulsive disorder to make sure you check everything and double and triple check everything. Has anybody seen the movie Slammin' Salmon? If not, it's worth checking out. Same guys that brought you Super Troopers. They've had some hits, they've had some misses, but Salmon nobody talks about, but it's actually one of my favorite ones. Anyway, one guy was on medication and he was doing desserts and he had to like count them and he ended up putting his thumb in them. And anyway, it was a restaurant business. So I'm going to put a close order at 13 bucks and see if that'll get filled today or tomorrow or whenever, but it's a nice little profit that I'll manage. So that's Q's. And then if I look at my SPY position, I just don't think the SPY has moved enough. So if I take a look at my SPY, SPY is right here. 1, 2, 3, 4. Looking to close. It's about break even. I got in for a 962. Was traded at 930, so it just hasn't moved. I need to see another couple of bucks of movement for me to want to take the SPY off the table. And then Nvidia was the other one. Nvidia was up like almost 4% yesterday. And I do have a play that's vol as well. I'm trying to see if it goes back up to 130. And this is 1, 2, 3, 4 for all the legs. There's the close, 826, and I paid 840. So it's break even. All right. So I'm not closing Nvidia. I'm not closing the SPY. I'm trying to close the Qs because we're up at least through Thursday's high, giving me about $1.50 a contract. So if I do the math on that, if I take $1.50 over $11.50, that's a 13% take profit. I wish it was 15% or 25%. It's not there yet. I could obviously sit on the sidelines and wait and see if the price wants to go up higher. But I'm just going to go ahead and look to issue the profit take on the Qs and be done with it. I have one more trade on the SPX for this morning that should be looking pretty good. A 255 trading for 230. I've got a debit in at 215 for profit. That's about 40 bucks a contract. So that one I'll just continue to watch. If I get a nice little bells and whistles going off here, then that one's going to be filling hopefully in the next maybe 15, 20 minutes while we're in session. All right, so that's a quick update there. Yeah, so Zell is asking, yeah, I mean, there's a link. If the team wants to post a link, I've got a pulver alert section for all these sessions I do with A1 Trading. If I find a live trade, I'll take it here, or their Discord channel. I'm posting a lot of alerts. So if you're in the A1 Trading Discord and you have access to my pulver alerts, it's right under here with Chris's trades. I do a journal every single day. Index trades on SPX, NDX, SPYQs, IWM, DIA, commodity trades. Just oil was the only one I focused on so far. Anything I like in Forex, stocks and options, futures, all that stuff. So that's kind of my full-on trade service right now. If you want that, that's through the A1 trading link. I have a link in my Discord for that, or the team can post that as well if you're interested. So, all righty, let's take a look at everything. So I said China had a big day yesterday, as it did. Today looks a little bit crappier. Now, it did gap way higher. I mean, we gapped way up here, then faded. So it's still technically up 0.68%, but this type of price action doesn't look super assuring or reassuring to have like a fall of like 2.5% from a gap higher. Like literally price, I mean, from that close yesterday, this is wild. So close yesterday, this thing gaps up here 3% and then gives back pretty much 2.5 of it. Okay. So, I mean, does this mean anything? I don't know. Not really, but it is a little disruptive in the price action. So, if we're seeing like maybe something like this where we have this trend line break, and technically you can't really ask for a better setup. So, we have a break, we retest, we go. If we retest this level, don't be surprised to see China come back in maybe one more time before we get the official go. Now, I'd love to see a bull flag. And I mentioned this yesterday in my live session. I do a live session at 3 p.m. every day called the final hour. And I mentioned the best thing I could look for would be if we see a bull flag. That'd be a great sign for the buyers to be very, very interested in pushing this thing higher. But if it does pull back instead, then it'd be some type of wave structure, something like this. Pull back into wave structure and then still looking to see if we stay bid. But that trend line break looks pretty good. Holding support, future support. I'd still be watching that. Okay. So that's HSI. That's the Hang Seng Index. If I go to some of the stocks that I like, so Alibaba is at 95. I do have shares of Alibaba. I think I have some ownership. Let me double check here. So Alibaba positions right in here. So I have some shares. I have a lot of options here. The 65 naked puts, some ratio spreads, the 60 by 40. These are actually, it's 70 by 65 and 65 by 40. So a lot of like income generating credit spreads. And then I do just have some shares that I'm willing to dollar cost average into. When I bought the shares, I think I bought it around, I guess, current price. No, that's working at 61. Where did I buy it? Oh, I bought it at 85. So I'm up like $10 a share right now. So my position's overall up about $10,800, and hopefully there's plenty more where that came from. Baidu is still a little bit upside down, but I got assigned early on Baidu. My cost basis is around break even now. My personal account's like 89 on break even. My managed accounts are in the low 90s, about 92 and change. So I need, I'm in the shares. I'm keeping them. I'm covered at 115 and 130. And then I got a bunch of credit spreads, the 80 by 50, the 80s. I've got naked puts. I got ratio spreads. So I'm still exposed. FXI took some fresh trades yesterday. I have some shares. They are currently covered up to $29, and we're trading at 29.77. So I'm probably going to forfeit some of the profit if we have an upside, but I also did a credit spread like the 31 by 30 or 30 by 29 or 30 and 30.5 by 30. I did a bunch of credit spreads yesterday to kind of add some exposure. I'm willing to take more assignment on some of the FXI trades. And I think that's about it. Maybe KWeb as well. KWeb, let me check my break even on KWeb because I know I bought these calls for not a lot of not a lot of money. It didn't cost a lot, but let me check here. So if I go KWeb $23 call, so a $23 call, let me check this account. So let's go history. Let's go this account here. Let's go KWeb. And I'll go year to date. So I bought a call for $8.20, which puts my break even to around 31. Now I've sold a bunch of options against that. I should have a tracker for KWeb. I bought the call. I sold against it. My break even is 796. Maybe what I can do now is actually issue additional trades against it. So let's go to KWeb. KWeb's at 29.30. We hit highs yesterday at $30. Again, structurally looks pretty good I see this as if we're coming back to a double bottom, okay, fine. But with this type of break right here and having a higher low off the backside of this trend line, to me, I'm looking at symmetry. So low to high swing, low to high swing. I'm looking for KWeb to get back in here towards about $44 or so. And I want to say my expiration is January of this year. So I still have like Q4. If we get another rally or additional continuation on China, this trade's going to be okay. But what I'm going to look for is if I can sell against it. So I've got a $23 call that puts my break even. Let's see here, $23 plus a break even of 7.96. So my break even's 31 bucks. So if I'm going to sell this, I need to sell and make sure that I'm keeping, my break even in mind, so I'm not just selling too aggressively. So let me see here. If I go to trade, I need 2 contracts to cover. If I go out, let's say 37 to 50 days, maybe pre-election, post-election might be great, but pre-election I could do for $31. That's my break even. I still get 70 cents for 30. Let me go out a little bit further then. Let's see, $33. So I can get 33 cents at a $33. Let me do the break even there. So if I have 23 plus 7.96 puts me at a break even of 31.96. If I get it called away at 33, I'd make $400 by November 1st. That's fine. I'm okay with that. I think I'll do that. 33 cents. I don't really have a bid here for the 34, which is interesting, but I do get 16 cents on the 35. Let's see. If I go out one more week, that would incorporate the election, which is going to be drama, obviously. But I get more premium. It's going out another couple of weeks. This is 51 days out. Let me delete this. So if I did for the 34, I'll do this one. I'm gonna do the $35 covered call. This is a 14 delta. I'll see if we can push up into that. So if I'll do 30 cents here, 2 contracts for 30 cents, filled at 30 cents. All right, so now I get to add to my break even. So this is adding a 11:15 expiration sell call, 30 cents credit, which will bring my break even down to 7.66. And that this take profit got filled on SPX 3 for 3. Thank you very much, Miss Lippy. $35 sell call. All right, so that would be, let me crunch the numbers there. So if I have $23 call plus the 766 break even, get it called away at $35, 434. So this would be 4.34 per contract, or per share rather. Actually, no, it's 434 per contract. And some I have 1s and 2s. So if I have 2 contracts here, that'd be $868. I'm a little bit happier with that. Okay, so I'm going to go ahead and follow through with that on others. 3 for 3 on my daily profit play. So let me do a quick edit here. Filled for profit. And another little bullseye. Booyah. And what else do I have on KWeb? So let's go KWeb. Need to do some maintenance here. KWeb, 2 call. There we go. Same thing. So let's do on this account the 35 for 30 cents, 2 contracts. Filled. KWeb. This account, 35 for 2 contracts for 30 cents. Okay, and rinse and repeat this account. So I can take this one and just copy and paste. All right, so I need to trade 35, 2 contracts, this account. And just a few more here and I'll be done. 23 on this account. 2 contracts. There we go. This one is covered. Almost there. 2 contracts. Yep. Okay, and should be good here for 30 cents. 31 cents. Ooh, a penny for your thoughts. And lastly here, 30 cents, 8051. Go to 2 contracts. And okay, all the accounts are in. Break even is 766. If it gets called away, it's $4.34 a contract. Should be about $868 in profit if we continue to rally higher. So I do this intentionally where it's out of the money. So I want price to appreciate. I want to see if this will actually test the $35 strike price. If it gets called away, I'm okay getting the stock called away for profit. If it doesn't get called away, then I've just lowered my cost basis by 30 cents, and I'll do it again, and I'll do it again, and try to do this at least 1 or 2 more times by the end of the year. And hopefully we continue to see a little bit of a push higher on China stocks. All right. So what else are we going to talk about today? Never a dull moment in the old financial markets. So let me add in my notes here. So I have a $23 long call, $35 sell call, and then it's 30.66 break even. So I can add that there, and I'm going to set a chart alarm at 35 to see if price actually goes above my 35. Oh, come on now. You mean I used up all 400 of my alerts? Jeez, oh Pete's. All right. Anything I can get rid of here? Alerts, inactives. Will this give me one more alert? 35. Survey says nope. All right. I need to get rid of some of those alerts. Anyway, fine. There's the trade. That's KWeb. So that's a bit of my China summary. Alibaba, Baidu, KWeb, FXI. That's the exposure that I have, and that's what I'm riding with right now. And we're looking to see if China is going to continue to get the market excited for some added global liquidity. Let me check the money supply, and let's go to U.S. money supply. It is back on the liftoff here. Let's go to money supply and see what other countries we have. China. How's this for money supply? It's been going higher. What other money supply do we have? Let's go Japan money supply. It's faded a little bit since April, but looks like as of August we've dipped. I'm curious if this starts to come higher. I'm just kind of assessing for like global liquidity. So we have like M1s, M2s, M3s for China. There's obviously a lot there. I'm looking to see. There's got to be like a better way to see like global money supply. Is there a way to track global money supply? Macro, micro. The M2 from the Fed website's always good. There we go. That might be just US money supply though. Okay, anything here? World major central bank M2 money supply. It's getting up there. All right, I'm going to keep this. I'm going to call this global money supply M2 and come back and track it. Money supply of major central banks, growth of the Fed, ECB, People's Bank of China, Bank of Japan, market cap divided by M2. Those might be good charts to check out. All right, I'll keep this page. Just want to see if we're heading higher. Global liquidity, look, this is where melt up is pretty solid, right? If M2 is going up, it just feeds more liquidity into the markets. I'll go to my the bottom of my list here. where I talked about what are the most important indicators we probably need to keep an eye on here for the US. Junk bonds, which are the widening of credit spreads or the tightening of credit spreads. This doesn't mean your typical options trade. This means like literally treasuries like AAA, triple B, triple C. If this is heading higher, credit situation is good. Okay, if this is heading lower, like we did back here in 2022, like we did back in 2020, like we did back here in 2018 when we sold off at the end of the year, then we did back this in 2015, 16 when we had like a 20% correction. You know, it obviously shows a little bit of liquidity crunch. So right now we're actually going higher, making higher highs and higher lows. No signs of something bad. And again, I wish I could say this is a leading indicator, but this is going to be a reflection of price action. So if the stock market starts to drop and dump, this might turn south and probably will, but it's going to be kind of correlated at the same time as opposed to one leads the other. But as far as the stock market sustaining that type of bear move or pullback or whatever it is, this might show us that hey, things are looking a little bit loose out there in the old credit spreads. And if they widen, that means there's less liquidity for investing and everything for the circulation of money. So that is something to watch. And then our big data that we should be paying attention to here in the US is I think that the US market, right, the indexes are going to be highly sensitive to the employment news that's coming in the next couple of weeks. So we have jobless claims and we have continuing jobless claims. Now, they're not the same thing, but they're both going to matter to see where are the trends. Now, you can see here from historical standpoints, they're sitting at these crazy lows. Like historically, we are still in a very fine labor market. I'm not saying it's super tight anymore because that's different. We've got the inverted yield curve now, or the disinverted yield curve. But from a reference of where we've been historically, we've certainly seen jobless claims higher and initial jobless claims higher, continuing jobless claims higher. We've seen worse employment situations than now. Um, but that's one thing we need to watch. The Fed did take that big bite out of the rate cuts in order to kind of help the economy. Now they can't prevent unemployment from going higher. They can't prevent the economy from turning over and rolling over on itself because we've had a pretty good run since that 2022 recovery, right? We had a bear market 2022, late 2022 into Q4. From Q4 2022 to now, it has been pretty much nonstop and almost nonsense. Yes, we've had some dips along the way, but I mean, this year it was like an April and an August dip, and the market's back up to all-time highs. So it shrugged off a lot of things, and I still feel there's a lot of potential risk to the downside. I'm still hedging just to be safe, but trying not to make it cost an arm and a leg. And but anyway, these are some things I'm watching. But S&P sitting here near the highs. Let's do dollar, gold, silver. Let's talk about some currencies as well. I looked at my Swiss franc pairs this morning. I'm now up about $9,000 on the Swiss crosses. So hopefully we'll continue to go that way. Hopefully more to come. And we also had the Swiss National Bank looking at rate decisions tomorrow. And if they cut, and it says that they're supposed to, if they cut from this level to this level, right? Swiss franc is weaker today. All my currency pairs except for the yen, which I'm still participating in a very small position on the Swiss yen short. But New Zealand, Aussie, pound, CAD, dollar, euro, I'm all bullish against the Swiss. And there's still a lot of profits to be had. Hopefully, I will have them. And I just want to see where they're at. So if I go to these positions on the Aussie Swiss, I'm looking to take this Aussie Swiss from that flash crash low all the way back up to symmetry. There's a low, there's a high, there's a higher low. Let's go higher high. So let me measure this because I'd like to take it all the way back up to this 6,100 zone, but I will be a bit more conservative on some symmetry. So right there for a low to high swing, and then right there for a lower or a higher low to higher high. So 60.50 to 6,100. Happy with profit on the Aussie Swiss. I'll keep that one there for reference. CAD Swiss, we had a flash crash there. I look at it kind of the same way. Take the low, take the high, and project some symmetry. And this should be able to get back up. There's also a big pocket right up here. And this is conservative. Like CAD Swiss, I'd like to see the CAD Swiss get up to like 7,000. But even symmetry here is at 65, which is fine. But I'm going to try to take it back up to, I don't know. Frank, you muddling around there in the background?
Yeah, hey Chris, how's it going?
Hey, what's up, dude? How are you?
Not much. Kind of a slow day in the market, so
Slow day's a
haven't
good day,
found
dude.
a good setup.
Yeah, I had
Yeah,
three winners on SPX this morning, so I'd say it's a good start. I'm not complaining.
it's good.
Um, let
Already?
me, yeah, I took them all like around opening bell. They were just little SPX trades.
Is it a
Uh,
strangle?
pretty much. Yep. So CAD Swiss, if
Gotcha.
we have a three wave symmetry, it's right here. I'm actually looking for a fifth wave to get us back into this high around 67. 67 to 68 would be a pretty good take profit. Longer term, it's all the way up here. We probably need to see oil stay resilient. We need to see a much weaker wave of weakness on the Swiss franc. So I don't know how aggressive I'm going to be on the CAD Swiss, but if we get to 67 or 68, I'll assess my profit. I also could see this one. If we come back up here for some like larger pattern, then maybe I trade it again, get back to this high, and then project the symmetry like so. So I think phase one is going to be, let's see if we can get up towards symmetry here or these highs. That'd be 1, 2, 3, 4, 5. We get there, take some profit. And then if we get a pullback, reload, and look at the bigger symmetry there. So again, this has been a year and a half in the making. So don't think like, where's he coming with this stuff? I have been tracking, almost stalking, almost obsessing over the Swiss pairs for a while, and I'm just trading them. But it's hopefully going to be like patterns in the making. Hopefully, this is one of those positions where, one of my favorite things to do in the Forex market is invest. Where I like the trade, I'm getting paid to hold the trade. This is what's nice about positive swap right now, and it's also not the Japanese yen. Like everyone was doing the carry trade and killing it on the yen crosses with carry. I had very little to do with that. I hate the yen, and I still will hate the yen forever. But dollar Swiss, so CAD Swiss is fine. Euro Swiss looking better, right? Looking better. I'd like to see the Euro Swiss back up towards parity at that would be 1.00. Pound Swiss, I'm trying to hold long back up to 117, but my profit target's 120. And then New Zealand Swiss, this one's looking much better. Let me plot some symmetry here, but I'd like to get back to the highs at 56. There's a round number at 6,000 as well. I'm going to plot the symmetry, Frank, and then you and I can tag team some trades. By the way, Micron has earnings today if you want to revisit that with me. I don't know if we looked at that on Monday or not. Did we? Did we look at Micron together?
No, we didn't.
Okay. So if I get symmetry on the New Zealand Swiss, that's around 55, 55.50. And there's obviously some momentum right up there. There's a nice little pocket, lots of structure right around that 5,600 handle. So yeah, we'll see. But symmetry is going to be my first target on a lot of these pairs. And then dollar Swiss, final one. It's hanging in there. We essentially have like a flash crash double bottom. If the Swiss gets weaker, I'd love to see this happen where the dollar just, because of the Swiss franc getting weaker, maybe the dollar survives, even though the DXY is still a mess. In fact, let's go to the DXY. It's still a mess. And be freaking careful on these fake outs, man. I think this is bear trap written all over it. So I'm not taking the bait. I'm trying to outsmart the trap that's set there. So I'm pulling like a Bugs Bunny, and I'm not selling anything. So, and I said this yesterday. If I want to see a bearish dollar, the best way that I can make money like that is just holding assets long. So if I'm long the stock market, long gold, long silver, long Bitcoin, long anything, if the dollar gets weaker, all these look good. If the dollar gets stronger, well, I deal with whatever chop we might get here and pullbacks we might get, but I'm not necessarily jumping into Forex pairs in the dollar right now. So I think this market is trying to do something. I'm just not sure if it's going to give us all the weakness that we want, or if this thing's going to like rip back and be, something post-election. I really don't know. And I'm not going to sit here and, lose sleep over what's the dollar going to do and what am I going to do with my dollar pairs in Forex. Nothing. If the dollar gets weaker, everything goes up. That's an easier trade for me. So those are my thoughts there. Frank, what do you got for me today? Look at Micron. What else are you going to look at?
I'm trying to look at what could be the top for the S&P today.
Okay.
But it's very choppy. You go on the daily chart, it does look like a reversal here, but it's very early in the day. A lot of these small sell-offs come all the way back up. I was looking at 750 today, 740 to 750 as the top, but I didn't take any trades. on the upside. So I'm still kind of in some sort of limbo, I guess, today, but I may end up not taking anything. On top of that, let's see, gold is coming down, which I like to see. Hopefully we get a retracement. I'd like to see probably 100-point retracement if that's possible. But I want to get into that.
Mm-hmm.
And Bitcoin up against some harsh resistance.
Yeah.
It's had a good run. It's like up 20% from the lows this month, but we're at the 200-day moving average. We're on some falling trend line. So yeah, we're just gonna have to see if this respects it. Could come down here to 6,500, and then if it breaks, we could look at a test towards 70K. But overall, I'm hoping that it goes up in the next couple months.
What trend line is that? What auto trend line is that, Frank? Is that a smooth or simple moving average?
It's a simple moving average.
Okay, because I've got an EMA on mine that's price is actually above the EMA. So a little bit more. EMAs are a little bit more aggressive to price than SMAs, but yeah, I was just curious.
Is it bouncing off it, or like how far
it
below
cut through
price?
It cut through it. So it's prices like when it came down to 50 grand, that was like below the 200, then back above it, then back below it, then back above it. So it's just kind of building a bit of a chop fest right now. I mean, the upside is Bitcoin's got to break above 70 to look like the bulls are back in control. Otherwise, I would say this is just a long-awaited accumulation zone, and I kind of hope that for an accumulation perspective, I hope we come back to like 52 or 50,000 again, so I can re-up. But if we don't, I did add some IBIT exposure. It'll be interesting to see the timeline on the BlackRock ETF. If it's IBIT that gets approved for options, it still has to be approved by the OCC and the CFTC. And if and when that goes live, I do have some core positions on IBIT that I would like to be actively trading options. So I do have, I think everyone has some exposure on IBIT somewhere in here. So I've got between, my lowest account has 71 shares, 100 shares, 300 shares, 400 shares, 200 shares. So I'm up $3,000, but this is one other leg of my portfolio that really hasn't done anything. So I know like Bitcoin is up for the year, and I didn't take any profit either. I was long since like the breakout at 30K. That was late last year, and I still haven't taken any profit on Bitcoin. So I also have just been sitting and waiting, like, are we going to 100 grand? And I hope we are, because that is worth the investment. And I've got some, clients involved in that as well.
This is why I think Bitcoin and gold are the trades, is as long as we see this chart come higher, that means we're looking at a faster rate of falling 2-year yields. And in the short term, I think that's going to be good for, things that are basically currencies trading against the dollar. So gold, obviously, we've seen that take off. I think Bitcoin, though, is more of a catch-up trade. So I'm kind of looking into like maybe getting more exposure on Bitcoin before this year's over.
Okay.
Maybe in the next week or so, but I'm kind of bullish Bitcoin. This got beat up so bad, and then it took a while for it to recover. And seeing that it's back up to these levels at like, is it 60 something, 63?
Yep.
I'm kind of thinking that price is going to keep going up as long as yields keep dropping, the dollar gets weaker.
Yeah, I'm looking to. I might have to change this pane. So it's interesting you say the 2-year dropping. The 2-year, 10-year. So now the disinversion is 25 basis points. So we're certainly like disinverting hard. I did take a screenshot of this yesterday. Okay, so the moment that we disinvert, let's go back and have a history lesson on how long did it take for a recession, because it's not instantly. And so we just.
I looked at it this morning.
You looked at this morning?
No, I looked at when the yield curve inverted.
Well, inverted.
Or when it disinverted.
Yeah.
It was in June, I think, and
So
then
we
June
did
of
it.
2007, and then January of '08 was the first month where things started looking grim.
Yeah. So this is exactly what can you see my screen?
Yeah.
Okay. So this is like okay, so we disinverted and it began 10 months later. So that's pretty much what you were saying, like June, July, says January. So it says 10 months. So whenever that disinversion was, it was 10 months for the recession to begin. December 2000, recession began 4 months later. So this is April 2001. Disinverted June of 1989. Recession began 13 months later. October 1981 began 2 months later. 1980, 3 months later. So it's not a perfect formula of like, oh, it's going to happen right away. Now, these in, I mean, 1980, 1981, that was pretty much immediate. 1989, 13 months later, 2000, 4 months later, 2007, the great financial crisis, which is arguably outside of the Great Depression, one of the worst times ever, 10 months later. So are we able to kind of kick the can down the road and see like, 6 months of leeway, 10 months of leeway? I don't know. So nobody knows. And maybe it's different this time, but something tells me it's probably not. It's just a matter of how overvalued do things get before reality sets in. And I keep going back to this, like it's going to be price is going to lead the way. But and we've talked about this a lot on these sessions. Like I was very nervous to see the longest inverted yield curve in history finally getting disinverted. Like there has to be some type of historical. It's going to rhyme. Like yes, there's going to be a recession, but is it X amount of months later? We don't know. And the reality is, if we compare this to the S&P, and the S&P for the next 3, 4, 5, 6 months pushes higher, and then has a Q2, Q3, Q4 collapse, well, that might be what triggers the recession. But it might be 6 months later, 8 months later, 10 months later. And then all it becomes is another data point on this chart right here that says, August 2024, recession began, blah, blah, blah later. It's just going to be another piece to this. So I think it's something to note. Like there's no crystal ball of like how quickly it has to begin, but I do think that going from the all-time longest inverted yield curve, I hope it's not the all-time longest recession, because eventually something's gonna hit. But we also have central banks and fiscal policy that have gotten a lot, I wouldn't say smarter, but they've gotten more efficient in terms of they use it a lot more. And so like the first reaction by the market is, when's the Fed going to cut rates? When the Fed's going to ease? When we're going to get the Fed put? When's the backstop? And the government right now is spending money like crazy. So it's not a good thing. It's just those tools that have been in play for the last 15 years are staying in play, and they are pretty darn powerful. So anyway, price is ultimately our leading indicator. It's going to be something that this is why I'm uncomfortable with like just staying crazy, blinders on, bullish, and to the moon. Like I just
Well,
don't
look,
think we
look,
go nuts
look at 2008 again.
On that like
I put it on my
inverted yield curve.
screen, which is so the
Okay.
yield curve in '07. So when it disinverted,
Yep.
this was March of '07.
Okay.
Was it? Yeah. Okay, so it was January of '08. We were at what is this? 1.5%. So the gap was significant, I would say, before we saw any like major disruption in the market. Whereas now, I mean, it's climbing steadily, but
Yeah.
we're still not
You
we're
know,
not really at a very concerning point yet. And even going back to 2007, it inverted again for a little bit. So we're not super sure of this trend. I feel like this has got to start running much higher. Like we got to be above 1. And at this rate, at the start of this month, it was at 0. So who knows? Maybe in a couple months we could be there.
I think that one interesting factoid from like these last couple of years, it's not so much about the number of the disinverted. Like if we go like right now, we're disinverted by 0.25, right? That's the 10 minus the 2. It's a 0.25%. I think it's the rate of change that actually starts to trigger the scary stuff. Because right here, it's like, if you look at 06, we had inverted back in December of 05, inverted in January of 06. We disinverted, but that didn't cause, I mean, there's no recession in 06. No great financial crisis in 06. And then we reinvert, or I should say we invert again, June of 06, disinvert, reinvert. I keep saying that backwards, but it's inverted several times. So we go invert, dis, in, dis, in, dis, in, dis. It just goes back and forth. And then finally, I think it's this that I think is like the sharpest increase. And that's when things get really bad. Like this is by June of 07 into, let's say, August of 07. How are we looking on the stock market in those periods? That's my question. So let me write that down. So we got June and August of 07. So June to August 07. Let's see when this market actually started to crumble. And this may mean absolutely nothing, but if there's anything to take away from it, I think the rate of change might be more important than the actual inverted versus disinversion, right? It's like if we aggressively move higher in that 10 and 2, that could be where all the trouble lies. So let me go back to that June and August of 07 and just find something here. So June, here it is. So June to August of 07, we are talking through some of the tops in the market. So this was the top in June, and then we go to October, and that was a double top that this market didn't look back. So let me go back to that tool. I'm just making a personal note here because this might mean something. You never know. And let's go back to that 08 period. And I'm gonna look at the percentage of change with that disinversion getting more aggressive. So right here, we have a rip. That move right there in a short amount of time goes up about 500%. It's a 0.22%. So I'm just going to make a note here. 0.22 or about 530%. And then we have another one that is from August to August. And that one rips up around 0.35% and 170. So I think it's probably more of the number itself, like 0.22, 0.35, because the percentages are measuring kind of awkwardly. But those are big leaps, man. Like you look at how this thing jumps and then jumps again, and by the time we officially hit that double top, you're talking September, October, things get a little nasty. So I'd say anything with a 1 month move, June to June, August to August.
Can you do something for me?
Yeah, for sure.
Can you go down to the bottom right of that chart and click on the settings?
Yeah, this guy.
Yeah, and then go up to where does it say? Go to invert scale.
Okay.
Now this is really confusing. Well, how do you know what's inverted and what's not now?
Well, now you just inverted the inverted yield curve.
Yeah, so now I just confuse things.
Well, why would you do that? Just go back to regular.
I don't know.
You trying to mess with me?
I felt like we were hyper analyzing this, so I was doing something. I was taking it a step further.
All right. Well, here's what I'm saying. Are we jumping quickly enough to see, like right here, it's up about 0.19. I mean, and again, maybe, and I'm not like, I don't think I'm hyper analyzing. I'm trying to grab onto something where it's like, does it make any sense? Like the Great Financial Crisis, if there's anything that's going to resemble that, I 100% want to be ready for it. And again, the best way to do that is to have protection, regardless of what the hell the market's going to do. Because if we don't know when the next big crash is going to happen or how it's going to happen and what the outlier black swan is, nobody knows that. So protection at all times is fine. But, you know, if we're really going to try to maybe profit from it, it'd be nice to kind of grab some past correlation. So I don't know, man. I could be totally wrong, but getting to this disinverted stage and going up around 0.25% or 0.26 points in the last month. I mean, that's not nothing. But surprisingly, the market's like, we're off and running. But maybe the big difference is our rates. Like our overall rates were way different in 2007, 2008 than they are now. So anyway, all right, I'll stop talking about it. This is not really getting me anywhere, but I'm just making a mental note. So pull up my Norm Macdonald walkie-talkie and say note to self. So
Well, what fundamentally broke? I know the housing market did, but what was the catalyst in 2008? Like why did all of a sudden we get a really bad month in that September? Even though the whole year was down pretty much. We started January down
it was
and
probably this.
continued.
I
So
think what was mortgage delinquencies and like the bond market, like everything started to show lots and lots of stress. And when you had rising defaults and delinquencies, it was probably all these things showing like these banks that are liable for hundreds and hundreds of billions of dollars of loans that would be defaulting. It was like the domino effect. So I mean the mortgage crisis had a lot to do with it because banks were just lending and on the hook and servicing for what people clearly couldn't afford. But that's the difference in the strictness now of like getting a house. I mean, I like on paper, I should have no problems getting a house, but going through an approval process between like personally and business wise, like it's not easy. It's way more stringent and kind of annoying than I wanted to be. But I'm gonna check this out. Oh, this only goes back to 1953. There you go. So fudge, man. This I guess we stopped tracking
why?
mortgage delinquencies in 1963. So Frank, it's no longer important. All right.
That's weird.
It's not important when they don't happen, right? Let's see here. All commercial banks delinquency rates, consumer loans. So I'm just typing in delinquency, right? And if I type in delinquency and get all these data points, so commercial real estate, single family residential mortgages, credit card loans. I mean, honestly, I'm not saying this is fun to talk about, but off session today, I'm probably going to go through each one of these and look to see, are they on the rise? And if so, do they track back to 07, 08? Were they tracking back? I mean, maybe this means something. If we're about to have like another great financial crisis situation, all these things were getting beat up. Like nobody could afford the homes they were in. People that were having like back in 06 and 07, people were buying, I can't remember what it's called, but it's a type of mortgage where basically all you pay for is like you pay for like negative amortization. And what this is so let's say your 15-year loan is like $4,000 a month. Your 30-year fixed mortgage is like $3,000 a month, and your negative amortization loan is like $1,200 a month. A lot of people had 3, 4, 5 homes that they were looking to renovate or flip or just keep in their real estate portfolio, but they are only paying the negative amortization. And all that means is like your principal is never getting lower and you're basically rolling debt over all the time, but the prices that people can maintain. But when the rate started to go up or there's less liquidity available and all of a sudden these loans are coming due, it went from like a $1,200 payment as an example to like $5,000 a house or
Yeah.
$8,000 a house. And all of a sudden instantly people couldn't afford them. And it was foreclosure. And that was like what started to break. So it was a matter of like rising delinquencies and people couldn't make, and there's lateness. And I'm sure there's like periods of it, right? Like 30 days late, 60 days late, and then it goes into potential delinquency, then it goes into foreclosure. So all these things take months to happen. But that was like 2007, 2008. That was like what broke because the banks were on the hook for all these loans that just could not be serviced. And of course, it's government bailout. But I mean, my gosh, man, we're talking about a government bailout of $700 billion, which right now seems like chump change, considering we're adding at like $1 trillion to our deficit every 30 to 35 days. So 700 billion. I mean, how much do we give to Ukraine? That and then some. So anyway,
Yeah.
and right now it's like subprime is big in auto. I mean, that's probably the next like potential threat is auto's like way less than mortgage, but the subprime auto is the same type of situation. People are buying cars at higher interest rates. They can't afford to take the payments, so they're stalling. And anyway, so I'll do some digging in that to see if there's any rhyme or reason or any correlations. But Those are all the things under the surface that could be like bubbling along, and maybe that ends up poking its head out and causing a lot of problems. But we'll find out. So we'll find out. Dude,
Yeah.
time flies. Let's talk trades. I did currencies, I did gold, I did silver. Bitcoin we looked at.
We can price out Micron.
Yeah, I was going to say Micron. There's hardly any earnings this week, so Micron's like the only game in town. I just want to look at it. So we're trading at 96. We've already made a move for the week on Micron. Not that we can't have another move, but it's pretty bullish overall for the week since last Thursday. The Qs are up to fresh highs since last Thursday. Did you see that? Looking at the Qs, we're sitting here up at the same highs from Thursday with a little bit of a close above. Yep. So this index is starting to maybe outpace a little bit. So the Dow is down, the SPY is flat, the Russell is down, and we're still trading within this range that I drew last Thursday.
Tech is the only thing that's up.
Tech is the only thing that's up. So another kind of divergence in the markets. Yeah. So I just thought it was interesting. So Micron earnings today after
so
market.
Nvidia's back up to 124.
Yep.
You know how they were talking about demand for chips was insane. They said that like a week or so ago. And then I guess with China rebounding with their stimulus, that could be true. Also, okay, wait, this is unrelated, but I just remembered. Speaking of China, and oil demand, did you see that oil inventories came in really low?
So that shows demand is higher than.
I mean, that's what I would be thinking. It was minus 4.5 million.
That's way off.
And the expectation was 1.3.
Yep. Interesting.
But we got oil falling, right? Oil's down.
I mean, for the day, yes, but oil's also. I mean, oil's had a pretty good bounce off the lows. I mean, to the peak yesterday, oil was up 10.79% from the looks like, what's that low? That's the September 10th low to yesterday's high. That's up 11% roughly. I mean, oil's not making a big move. I think that the whole global demand picture it matters a lot for oil. Oil is very well supported on the technicals, right around $66 to $65. But if it breaks and global demand somehow becomes like the same situation, like this was slowing global demand, and if all of a sudden we break below these levels and it's slowing global demand, that's not a good thing. I would actually be pretty skeptical that the markets make all-time highs if global oil demand is slowing, because it's probably a lot of US, it's a lot of China, and then OPEC. OPEC doesn't want to see prices dropping, so there might be cuts in production. There might be, like, they always play around with, if global demand is slowing, they just stop producing, and they try to keep prices relatively stable and elevated. But you never know. So I think global demand, if it picks up, that could be a good sign for oil to stabilize and get back into the 80s. You just wonder how much that's going to affect U.S. inflation numbers. But as we saw last week with Fed's talk, or Powell's talk, I think the U.S. is way more focused on labor data than it is inflation data right now. Agree or disagree? I think labor is way more important right now than inflation.
I don't think, since inflation fell so hard, I guess if oil came back up, it could do something to inflation, but I don't know. I think they're more concerned about saving jobs now than anything.
Sure.
Because that's the thing that's most in danger to crack. And so if that falls apart, then
that's the reality of the recession.
We are in more trouble.
Yeah, if we have like the labor market is cracking and getting worse and softening like crazy, then that's when the recession talk really becomes the reality. It's like, look, we are a nation that is 70% GDP consumer, right? We have to buy stuff for our GDP to be strong. If people aren't working, people aren't buying. So if our job numbers get worse, continuing claims, initial claims, obviously we miss on non-farm. None of these things are good for the consumption side of things. So for a stronger economy, we don't make stuff anymore. We buy stuff, right? So for our economy to still be humming along, we want to see happy consumers. Now, the one saving grace is maybe we stop buying little things. But if people are still looking to make moves in the housing market, because right now, if you can have a home and you can have that as an asset, you can have that and build the equity, you have something that is available. Again, if you sell it and you have, all this excess like liquidity, or you have all this equity in the home, that's where most people's balance sheet as like a US home buyer, the balance sheets have preserved this like bull run, in my opinion, because prices have gone up in homes from the median home at like, I don't know, man, 150 to $200,000 within the last like 5 years to now like $300,000 to $400,000 median home price. It's like more than doubled, which is why we're at these all-time unaffordable housing levels. But a rate cut like this and another 25 to 50 basis points by the end of the year, another whatever 20, it's either 50 or 75 by the end of the year. Once we get through that and it hopefully reflects in the mortgage rates, then there's going to be a little bit more moving and shaking where people are willing to relook and there's more supply coming online. And I'm sure it depends on the market, but I'm in a market where housing, it's like there isn't enough space for housing right now because the biggest builders in the world, like in the US with Pulte and Lennar and is it DH Horton? DR Horton? Who's a DR Horton? What the heck? Hang on. It's one of the builders. DR Horton, yeah. So Lennar is LEN, Pulte is PHM, DR Horton DHI, and then Toll Brothers is TOL. All those home builders are literally in the same neighborhood, building out phases and buying up land and competing to just get more homes built. So, and I know that this is my market, not your market, but if there's a housing demand in these markets in the US, those big old home builders are going to be there like ready to flood the market with supply. I don't know if that's going to be a problem at some point when it's like if rates don't come down enough, you're going to flood the market with supply and people can maybe still not afford homes. So, and what does matter is, are they still working? Because you can build all homes you want, but if people are losing their jobs, you're not buying a house, unfortunately. So again,
Demand is
all
still
stuff. Demand is totally there, but it's also there from like the biggest pockets in the world. Like if you can't buy a home right now, who else is going to come in and buy a home? Wealthy people. Okay. Investors, BlackRock, So anyway, the demand is there. The supply is playing catch up. But we've had a crazy unaffordable housing market for a while now. And, the rate cuts are important. It's just, is it enough? And how
Do
quickly
you
can
think
it
the
actually?
majority of these home sales are from hedge funds like BlackRock?
No. It's a small sliver. Like it's still less than it's less than 10%. It's probably way less than that. It's mostly still like citizen owned, but I mean, there's still real estate firms and there's individuals that just have crazy amounts of debt and they just manage it to have more properties. There's Airbnb, right? There's Airbnb people out there that are just going to buy and flip and whatever they can do to have long-term rentals or short-term rentals. It's a whole thing, man. Like real estate is always a great asset. Land is a great asset and it's still tried and true. But my point is, if people lose their jobs, they're not buying houses. So whether you cut rates or not, who gives a crap? So like these things matter. I think that the whole point of this conversation is, as you said, labor market is the most important thing right now. If people are losing their jobs or our employment numbers are turning to be softer and terrible, then that's probably the biggest sign of this market rolling over where it's like, okay, now the consumer is not only strapped because they've been spending more than they can make and they're carrying these high levels of debt, but now you're getting job numbers are getting softer, unemployment's rising and continuing to rise. And all of a sudden I don't know. I just think there's a lot of things that kind of halt this melt up. And so I just want to be ready for it. I'm not saying I'm positioning for it where it's like, this is the direction I'm trading. I'm just saying I want to be ready for that type of rollover if we get it. Otherwise, market ignores a lot of things. Election years, the market usually averages about 20 to 22% a year to the upside in the S&P. We're probably going to have some volatility pre-election, but I don't think we have a lot of election drama unless we have a full Democratic sweep or we have a full Republican sweep. Because the only thing the market's going to hate more than bad job numbers right now would be policy change. gridlock for the US is frustrating because nothing gets done, but the markets love it because there's no major sweeping policy changes.
I don't think it's going to be a sweep either way.
I don't think it will be either, but I'm saying like if that were to happen, that's where the market would be more uncertain because it's like, what does that mean? Granted, if we have a Democratic sweep, then people are going to be worried about, increasing in taxes and tax the wealthy. It's still going to be the middle class that pays for it somehow. You're talking, I mean, the dumbest thing of like taxing unrealized gains. Are you effing serious? Like, I don't think any of these things get passed, but just the notion of throwing those out there as a plan and a policy, it's scary. So sweeping left or
Well,
sweeping right is
I
scary on either side.
I saw that too. I was really confused about that because I don't even know how you would track that. It was
Should
a
never pass.
suggestion,
Yeah.
but it's for people worth over 100
100
million
million.
or something.
I know.
So if we, I don't know, I guess someone like me was trading, and I was up whatever amount, I wouldn't get taxed because I'm not worth 100 million.
Yeah. I
Something
get
like
it.
that.
It's just the notion that we would do that because all of a sudden, all I'm going to have going to the back of my head is like Atlas Shrugged, where it's like the people that have the most money are like going to find ways to find their loopholes and they'll find ways to put their money elsewhere and they don't want to be in the U.S. And all of a sudden, it's like going to dry up.
I think they would just stop. Yeah, they would just stop kind of being active then in the
Right.
market.
It's like, yeah, I'll take it, pay it once, and pay it never again. Or I mean, again. I don't think it ever gets passed because that is a terribly stupid policy. Anyway, we'll talk about something else. All right, dude. Couple more minutes. You want to give me 9 minutes and let's talk Micron? All right.
Yeah.
Option Slam. Let's go to Option Slam. Micron. Here we go. So we have earnings after market today. We have an average move of around 10.39 according to the last like 50 earnings. I'm reading here 6.5, 6.79, 6.8, 5.4, 6, 6, 6.5, 7, 9. 10 is the average, but I'm not seeing a lot of convincing here other than the last earnings report, which was June. That was a 9.72% move. The other ones I'd say safely we're kind of looking more of like the 6 to 6.5% move. So if I'm going to do something on Micron, Micron's trading at what price right now? Micron is trading at 90 something, 95. Okay. So 95.50. So we've got about a
5-point move.
Yep. So I've got about $5.7, 5.73, and I'll go 6.5% as well. 0.065 times 95.52 to about a 620 move. So we'll say 550 to 650. I think that's fair. That's an expected move based on what I'm seeing. It's pretty conservative, but I also think that if I position my option in a way to get that move, I can get the move. If we have a 7, 8, 9% move, that makes our life a lot easier. Let me see if I can price something out of Micron and see if it's any good. So it is interesting that Micron is not priced out or moving the same way as other semiconductors. If you look at NVIDIA is getting a rip. I also saw that NVIDIA was rallying because their CEO stopped selling, which I think is ridiculous. It's like that's why the stock's going up, is because the CEO is no longer cashing in on crazy amounts of profit. Whatever, but it looks different than SMH and SOXX. Are you trading anything with like multi-leveraged semiconductor stuff?
No.
No, okay. I looked at actually on FinViz, when you look at the heat map, there was like a double and triple leveraged play. I was like, oh, I wonder if Frank's trading that. All right, so 550 to 650. If I look to price this out, I probably would look at an expiration for, if we go Friday. Okay, so a couple ways to trade this. Do you want to be a buyer or a seller, Frank? What do you think?
I don't really know. I mean,
Okay.
they have high expectations this quarter, and I don't know. They would have to. Okay, price is far off the highs, so I think a good report would be good for the stock. So maybe it would be volatile to the upside, but I don't know. I've been burned too many times on betting on volatility.
Yeah. So here's okay, so here's a way to play it that's not terribly expensive. Now, what I don't love is I conservatively calculated a 550 to 650 move, right? That's what I calculated. Now, if I take this trade where I buy a 96 call and I buy a 95 put, and I give myself $10 of direction, that means I can max my profit out at $10. Okay. Now, if I pay $6.55 for it, I'm risking 650 to make 350, which isn't exactly the most favorable reward to risk. Okay. The implied volatility here is $8.51 by Friday. Now, I do want to see something. If I go out farther in time, how much more expensive does this get? Because this isn't a bad play, but this is way lower from what I calculated. I don't want to pay 650 for this. I'm paying a lot more for that implied volatility, which I don't want to pay for it. But I don't think that if I did the opposite here, if I were to switch this to a sell and a sell and a buy and a buy, and I try to contain the price, now I can collect $6.50. And if price blows through my upside here, I'm still risking $340. But but then I have to wait all the way to expiration, which by Friday is not bad. It's only 2 days of trading. You see what I'm saying? It's like a seller almost to me seems like the more attractive piece, because if we don't see a lot of volatility out of Micron and it just is like, a little like lackluster move, then it's easy to collect that premium and walk away with profit. The only issue is if somehow the market's like, hey, there's no other earnings, let's play something, and the market's like, yay or yay, whatever, and we see this big move. So I don't know. I don't know if I'm going to trade it. I like the idea of selling the premium, but if we have a blowout move, I'm at least risk defined. So it's not like we lose a ton, and I could also tighten this up. I can risk less. Actually, I'm risking a little bit more. Hang on a second. Let me see. So collect the premium. Nope, more risk. That's probably it. It's about 10. The expected move is 850. So if I went to $8, I think 10's fair, dude. So if I'm right, and I'm not like, it's not like I'm taking 650 unless price, obviously by the end of Friday, if price by Friday is inside of this, okay, inside of this, then you can collect the entire 650, which is a pretty good trade. The flip side of that is if I buy this and buy this and I sell this and I sell this, now I pay 650 and I need price to move $10. Now, if it moves $10, I can make the $3.50 or $3.40 a contract, which gives me a little bit of profit. So I don't know, man. It's kind of a shit show. It's kind of a crapshoot because I'd like to say I can contain the volatility, and I'm only giving it a couple of days, right? That's one thing I'd say. I'd rather sell it if I'm giving it a couple of days, but it just gives me very little time to manage it. So I guess how much could we get here? So Micron, a gap fill would be about $4. I mean, let's look at $10. If we went down to 85, that's going to be new lows on Micron. If we go to 105, that is coming back into the August highs. I mean, a trade's a trade, dude. It's not that big of a deal. Frank, I'm going to take a stab at selling and buying and buying. Now, let me see if I can construct this where I go at the money. So if I go $95, now I get $7 and I'm only risking 400. That's interesting that I'm risking less if I go out a strike. 396. So that's about the optimum if I'm going out $10 or so. So 346 is my max loss. I'm going to take the trade, dude. So I'm going to try to get 655 in this trade and see what happens. So let's go.
So this is containing price. You're selling
price.
the volatility.
Yep. So instead of doing like an iron condor where I sell up here and I sell down here, I'm actually selling at the price, and I'm looking to see that price just won't go beyond the expected move. That's what I'm looking for. So, and because I'm going to do expiration out to the 27th, there's not a lot of extra time to, you know, we can get an earnings reaction, but if we like instantly like react and then fade, that might be good to like see my price come back to where I need it. So I'm going to take the trade for 655. See what I can get here. So 655. See if I can get filled for 6.55 credit. Oh, come on now. Bid ask is not super wide. 654. Come on, you turds. 653 got filled. Okay. Time to get some action here. 653 not filling. Gosh darn it. 2 filled. Okay. Okay, I'm getting filled at 652 for everybody, which is good. That's not bad. Okay. Come on, 652.
So tech looks like it's the only thing up today.
Yeah,
Looking at
tech is the only thing up today. All right, so trade is in. Let me see. Can I take is this screenshot? Is this like confusing if I put this in my, I'm just going to take a picture of this.
Of that?
Yeah. I don't know if that's
You
going to
have
help anybody or confuse anybody. So let me just do
you
it
have
on the
a
chart.
chart?
Yeah,
Like
I'll do a chart.
Visualized
Yeah,
chart?
yeah. I'll do a chart. 6.50 to 6.55 credit. All right. So this trade is a 9.27 expiration. Selling the 96, selling the 95. So selling 96 call, buying 106 call. Sell 95 put, buy 85 put, 650 to 655 credit. I want price to stay between, let's say, I actually want price to stay to be greater than 85 and less than 106 for profit. Look to manage 25 to 50% take profit, or hold for full if price hovers around 95. Because if it stays at 95 and we only have till Friday expiration, then it's a pretty easy trade. So I'm going to box this in, and let's go from 105 or 106 to the upside. 106 down to 85 right in here. And we just need to see price essentially stay within this. So I'll put a little arrow here, have some fun with the drawing tool. I want to see price stay below and stay above. All right. Does that make sense?
Yeah.
All right. So that's the trade. That's the screenshot. That'll make a little bit more sense. I'll post that in the Discord for my service. Okay. So it's priced in, dude. I'm in. Micron. Let's see what happens. So this is a stock options trade. MU 9/27 expiration.
Oh, yeah, we have Costco as well.
They have earnings? Is that Thursday?
It's Thursday, yeah.
Okay, so sell 96 call, buy 106 call, sell 95 put, buy 85 put, 6.50 credit or higher. So this is 650 max profit, and then 350 max loss. This is a MU earnings play, looking to see if price will move less than $10 either direction and allow us to keep the credit and benefit from a lackluster movement. Now, I don't know. Obviously, if Micron has like it's up freaking $30, then, well, crap, I'm going to lose $3.50. But I'm going to go after a profit target. But the expiration is near term enough that I'm like, if we just have a lackluster move on Thursday when the market opens, if there's not a huge gap one way or the other, then that's kind of perfect to just kind of hang on to it and maybe see like immediate profit. If I can turn 650 credit into like a 450 debit or 350 debit, I'll probably just take the profit and move on and just take the couple $100. So I'll look at that trade. All right, so let me throw my screenshot in this one. So copy and paste, and right here. All right, and that is posted in the stock options trade of my section in Discord. There it is. Cool. All right, that's Micron. Costco. So
this will have to be the last one.
Yeah, this is the last one. So I did I do this one? I did do this one. This is pending. I don't know if this is going to get filled. I think you and I talked about this on Monday.
I'm thinking that this one's not. I feel like this one will either not move too far to the upside or it will go down pretty hard. I don't see it going up to.
Yeah. So I have a pending. I have the pending order. It's a 965 by 970 bear call spread. I think we priced this one out on Monday. I mean, if it jumps to the upside, that's fine, but I would look to fade that just because. And I mean, I'm just guessing, but if I get filled for 250 credit, then I'm looking to, see it fade and just stay below my strike at 965. What is likely going to happen is it's limited or it goes lower or even it moves a little bit. I don't get filled. This trade doesn't even matter. Like it doesn't get filled and that's fine. But if it does get filled, hopefully it's a, gap up and then fade and we just get it to stay below our 965 as a line in the sand and we make money. So I'll keep an eye on this one. It's pending. It still has to get filled. And this would be after earnings because it's not happening now at 905. But anyway, I still want to like own Costco on dips. I think I have some ratio spreads. Let me double check on Costco. So I know I have a bunch of trades. Costco. Yep. So I have a bunch of like ratio spreads or credit spreads, 700 by 655, 655 by 600s. I've got some ratio spreads there. It's a 111. Let me check one account. So I have a buy at 700, sell at 655, and sell at 600. So yeah, I'm creating like a big profit trap, and I'd be willing to own shares with my margin accounts. I'd be willing to own shares at $600 a share. So it obviously tie up capital, but if I am in the trade, I've got a $5.43 credit by January. If price just does nothing and stays elevated, I make $540 a contract. So I'm pretty certain that Costco is not going to dump to $600 by January. That's a pretty big drop. So I actually like that trade a lot. And that's in my alert service as well. I feel like that trade. So, all right, dude, I've stretched you at least 8 minutes past your comfort zone. So I guess I'll let you go.
Yeah. Too long, man.
Too long. You can handle it, bro. Yeah. All right, cool, man. Any final words? Any parting words?
I would just say to be careful because we are just in a spot in the market where things are just, I don't know, very uncomfortable. You can see price keeps going up, but for how long and how far? So I don't know. My last words are I'm going to keep looking to kind of cap the upside or at least call the cap. So I'm going to be selling credit spreads. But today has not really showed me much of a move, so
I'm
not really involved in it right now. But that's all I have to say.
All right. From the mouth of Forrest Gump. That's all I have to say about that. All right, man. Any final questions, anybody? All good? I think we're good, yeah. That was a fun session. That flew by, dude. Hour and change flew by, as always.
Yeah, we covered a lot of ground.
All right, cool. And we also deep dove into probably unnecessary things with yields and rates, but I'm going to look into those delinquencies. I'm curious to see like what that position looked like just going into the great financial crisis. But look, it's whatever is about to happen is it's not going to be immediate. Disinversion is not immediate. Here's the last 5 times it's happened where we had recessions: 2 months, 3 months, 13, 4, and 10, all different. Nobody knows. So this is why, to Frank's point, looking to kind of play some tops. I'm adding hedges to make sure that I've got some profits to roll in. If I get a drawdown, I want to like offset those with hedges. But you never know. And I certainly think that risk is it comes quicker. Like when we have these like super low melt up environments, like risk comes quicker. Just like we saw back in July and August. It's like I don't think we have another vol event like August, but you never freaking know. So I'd rather be prepared for that than not. So, all right, that's it.
Mhm.
Happy Wednesday. Have a good rest of the day, everybody.
Yep.
See you,
Sounds
Frank.
good.
Bye.
See ya.
Thanks for tuning in to today's A1 Trading Show. Make sure to subscribe and to turn on post notifications so you don't miss the next one. Also, we're looking for more guests to come on the show. If you're comfortable being on camera, have trading experience, and you're looking to grow your audience exposure, we'd love to have you on. In the live stream chat and description below, we'll drop a link to apply to be a live stream guest and join in on the conversation. We hope to have you on soon. That's all for today. Trade safe, and we'll see you next time.